All right. We get this in about a couple seconds here. What is up? Welcome everybody. Thank you again for joining another stream. I'm another educational stream. We're gonna get into some nitty gritty, right? Understanding some certain behaviors, certain price action that we might not normally understand. We're going to look at a chart to give us a better behavioral perspective and understanding. Today we're gonna talk about again, it's going to be a lot of psychology classes that you guys are going to end up doing with me as far as looking at charts go, right, for a base perspective. So then we can look at a chart with a plan, right? And if that plan is folded or if that plan is distraught, right, I can automatically switch my bias because now all the work that I've done for one has been invalidated. So literally sitting there doing a math problem, right? And you have 3-4 questions and you're sitting there and you're taking 3 answers that you know are grammatically wrong or grammatically incorrect, right? Because you understand that that couldn't make sense in that situation, right? It's the same exact situation here. Taking our plan, right, and eliminating certain steps or certain behaviors to be able to give us a better bias as to what is happening. We're going to talk about the goals of the composite operator, market maker, whatever you want to look at it as. We're going to talk about the goals of those hedge funds, right? How they manipulate us, right? How they emotionally manipulate us, and how they are present on charts, how their footprints are present on charts, and how we can see that ourselves. We're also going to be talking about a little bit of introduction of liquidity concepts. Now, this is going to be very hand in hand with the goals of the composite operator or the market maker, because that is their goal. Their main goal is liquidity. So if we can mimic them, right, and start to follow them, start to follow the crumbs that they leave behind, that's going to be in the form of these footprints, right, these hints that are going to be given to us that we are going to be studying, looking for these certain behavioral actions every day. Now, to get into the start of this, what is the composite operator, the CEO, the market maker? Just to give you a basis on everything before we begin, we need to understand that one, the market needs balance. So this is the main, I guess you could say, concept that myself, right, I trade off of. I'm understanding that, okay, the market needs balance in order to go up, right? In order to continue up, I understand that the market must come down, fill unmitigated orders, right? And then continue from that. I understand that if the market comes down, right, we need to put in a lower high. We're looking for that drawback. Price comes back, and then that's where we would look to take a trade from that certain point in time, right? So balance, just knowing that liquidity needs to be captured, right? We need to introduce demand or supply to continue up, to put in a lower high, right, to fill unmitigated orders that cause this move down. So all price is doing, right, is moving from objective to objective, right, point to point, filling in all these unmitigated orders, as well as liquidity, right, introducing new demand or supply, and then we get our final continuation from that. So understanding that balance is going to be the most important thing in the market. To go up, you have to go down. To go down, you have to go up, right? So when we talk about the goals of the composite operator and using balance within this, right, a lot of the times we see extremes of markets reached, and what this does is it causes a psychological takeaway, right? Late shorts start to get into trades here. Longs are stopped out, right? And then we see reversals at points where we don't believe reversals are going to be. Now, that's just a main understanding of the composite operator, right? The market maker, they're going to get in where everyone else is not in. They're going to get in where everyone else is thinking the opposite, right? They're all thinking, oh, it's going to continue down. So then they get in, move price goes up. And now all the people that thought it was going to go down, right, because of this large move to the downside are now liquidated out of their trades. Market makers made all their money that they needed on one move, and then it's done, right? So the goals of the composite operator, the main one that I'm going to be looking for, right, is liquidity. Now, why do they need liquidity? Liquidity is needed to retrieve as much as possible, right? To fill as much as their order as they can before price moves, so then they can make the most money as possible. Basically, they are greedy, right? That is the most basic way to explain it. As a greedy composite operator, market maker, you want as much liquidity available within the market so you can fill as much of your position as possible in order to then move the market. We'll get into hedging, right, with these funds and everything like that in a second, but understanding the goals, they're looking for one, liquidity, right? Unmitigated areas. So imbalances, displacement, whatever you want to call that, right? It's that dark printed candle, that heavy printed candle that moves market in one direction, causes a lot of orders. Not a lot of orders are able to be filled up and leaves you with imbalances or displacement. Liquidity, unmitigated areas. And then while they are doing all of this, right, their goal is to manipulate the market in a way that allows them to then take all of that liquidity, mitigate and fill all of those orders, but at the same time, right, psychologically, emotionally, manipulate traders into thinking that price is going to then move in a different direction. Right, so they're looking for areas of liquidity so they can fill their orders as much as possible before the large move happens, right? They're looking for unmitigated areas, imbalances, displacement, so they can balance the market and the move can occur from that. And while they're doing this, right, they're trying to manipulate in a market in a way that allows them to then fill these objectives, but at the same time manipulate the psychology. Why? So they can generate more liquidity within the market so they can enter more positions, right? So we talked about balance. Now, looking at this on a chart, understanding where balance comes in, right, we can utilize one, premium discount, imbalances, right, order blocks, areas that are unfilled, to get a general understanding of where it is, right? But we understand as smart money traders, right, as I'm looking at charts, that I'm going to be looking at my market structure, then finding my range going in from that. But understanding that the main goals of the composite operator, what do they want to do to you, right? How do they want to manipulate you? And understanding that you can protect yourself from this, as well as get into that mindset, right? Get into that greedy mindset to where now you're targeting liquidity, right? You're targeting uninformed money or retail stop losses, and looking at unmitigated areas, and you're getting in trades, right, when composite operators, market makers, whatever it is entering the trade as well. Now we're making money like them, right? That's exactly what we wanted, and we can utilize market structure, order blocks, lower time frame structure to then increase our risk to reward. So we understand balance, we understand the goals. Now, another little psychological thing as a hedge fund, right, or as a market maker, we have to understand that there has to be a buyer for every seller, right? So these people with big money, a lot of money, a lot of the times, right, they don't have a seller. Now, what does that mean? That means they have to open positions themselves to then hedge and cover positions, and now all of a sudden they're holding positions $1 million of drawdown with others that are in profit, right? What I mean by this is to just draw a basic understanding. Let's look at a trend right here. Price creates A large move, large impulsive move to the downside, imbalances displacement area of supply is shown. As a hedge fund, right, they are gaining liquidity within this area. They enter their positions, they move price down. Price is now moving down, right? And then they start to take profit as well as start to get some buy positions, right? If they're filling orders over here or whatever it is. So we now see price start to consolidate, right? Create demand, and then price starts to move up. Now understand that they're in long positions right here, right? Short positions right here. They've taken profits on this, but they're still in their short position. So at this point in time, taking a long position, right? Or just taking profits on a short position is bringing them back up to now break even, right? After they have made their certain profits. So basically, looking at this as the most basic understanding of it, right? They want to enter again where they entered before. Why? Because they made all the money on the first move. They're taking profits, so price is coming back to then where they entered and filling unmitigated orders, right? Imbalances along this move right here. Once price comes to that area, fills those orders, and their positions are free, right? They can now enter again, and then we see that move from that. And one, if we're looking at this just from market structure, right? Now we see that low created, that lower high, and then that continuation from that. But from a market maker standpoint, right, they enter, push price down, start to take profits and or get in a buy position, and then from that, price is moving from there. So now understand that this buy position is still open, okay? So buy position is open still here, right? Price comes back, back to their entry. They're able to enter again now. So all this demand that was here from where they had entered here to move price, right? Demand zone is created from here, from that, right? And that's why we see reactions as price is coming down. Understand overall, we're still in a higher time frame bearish trend, but that demand, right? That area of unmitigated institutional sponsorship, whatever it is, right? Once price comes and mitigates that, now this long position is in drawdown, right? Millions of dollars of drawdown coming over here. What happens? They make money on their shorts. They start to take profits on their shorts. They bring price back up to their long position, close out their long position, and then we see continuation. Lower low, lower high, lower low, lower high. All in the sense of a market maker perspective. They take profits, right? Make their money, take profits. Price comes back, they enter again, make their money, take profits. Price comes back, they enter again, right? So they need to get in these situations to where they can get themselves out of this drawdown, because being in millions and billions of dollars of drawdown, right, is not what is needed, because you need a buyer for every seller again. So to rebalance the market, these positions are then closed from this previous move right here. Price enters, or they had entered here, right? Price comes down, they close out their long positions here, and then we get that continuation, right? So this would be that final confirmation where we would want to look to take trades. So getting rid of this, as well as this right here. Now we're going to go ahead and take this to some candlesticks, stop with the talking, and get some understanding of how we can see this on a candlestick chart. Now we're going to be looking at some gold today. Before I draw this range right here, let's go ahead and get rid of this. Let's go to replay mode so we can get a fresh understanding of what we're looking for.
Gold.
Alright, so at this point in time, just looking at structure right here, right? We have a large run up that has taken out all of these shorts, right? From September of 2020, August of 2020, all of these shorts that have been built up right here. So we're looking at this as just a large pool of liquidity. All right, let's start on the weekly for this analysis. So we have a large pool of liquidity that was created. So early shorts getting in trades, thinking that they caught this trade to the downside, right? Whatever it is. Understanding that all of these shorts were here, so we created all of this liquidity within the market. If we saw a liquidity rate to the upside followed by a break of structure to the downside, we could then look for lower prices overall and look for price to then draw to liquidity, right? lower within the range, equal lows within the range, right? From this move, this low right here that caused this high, left imbalances, right? This is our impulsive move. We're looking at the range within that. Liquidity available. Here's your liquidity right here, right? And then your sell side liquidity below. So understanding that we have now taken liquidity to the upside as well as offered a weekly break of structure to the downside, we're looking for lower prices overall. So to now take this and refine this to now this impulsive move right here, we have an impulsive move that, yes, took a move that possibly broke structure out of the range, right? We would still need a weekly lower high to be formed, but I can see these lows taken out right here, right? As well as these lows after a liquidity rate to the upside, as well as volume, right? Look at that volume being shown down here on the move that broke structure to the downside. So if we look for our consolidation, right, before the impulsive move, we have consolidation here as well as consolidation here. This will show me a demand zone, right? Here's our imbalance that was left behind right here and here. So this is a general area of weekly demand that I can, one, look to take buys for a lower high, and then we get that continuation to the downside, or if buys proceed, right, and price ends up breaking structure to the upside right here, I can then hold for higher prices above the range, right, to weekly equal highs due to this internal possible break of structure upside from this impulsive move right here. So now we understand this zone as a weekly demand zone. We have our imbalance. So unmitigated orders, right, that we're looking to be filled. There's liquidity down here as well. So we can understand price to come into these areas, possibly consolidate if daily or 4-hour structure breaks upside, right, then I can look to possibly take a trade. Now let's go to the daily at this point in time. If we do some refinement on the daily now, from this entire move, we had that consolidation, right? We can look for institutional candles within. Now, if we're looking at institutional candles, I see this candle, I see has been mitigated. If I'm looking for the next unmitigated institutional candle, right, the very last sell candle before the buy candle, this is what I would see right here, right? I can see this as well, also unmitigated. This you could argue is mitigated from these two wicks into that, right? We understand this area as a consolidation area with two institutional candles, one that is mitigated and one that is arguably unmitigated. So let's draw this out real quick. As our institutional candle. So our daily institutional candle of price comes into that, right? We receive a 4-hour break of structure upside. Then I can look to possibly play this range. Now we need to understand, right? We need to not just look at this and look at those areas of demand or supply, balance, all of these areas right here, and immediately look to buy within these areas. Why? Because remember what we first talked about, right? In one of our first streams, where we see price action moving up like this, right? Price starts to come back down, and once we get this first impulsive move, right, to the upside, we immediately start marking out institutional candles, right, zones of demand. We find all of our unmitigated orders, whatever it is, right, on this side, and then once price starts to come back down into these areas, we immediately look to buy, right? But what happens? Price moves off of our zone a little bit, we get destroyed, right? Because of the order flow of the market, as price is coming up here and we get that break of structure downside, right, we are now looking for price to come back down to the very sponsorship, so the very first point, right, that started that entire move. This order, these areas will have unmitigated orders, right? If we wanted price to then proceed to the upside, I would look for price to slowly come down, right, generate liquidity as we're coming down into this area of demand, institutional candle, whatever it is, right? And then we would look for then a break of structure upside or a liquidity rate to the downside, then break of structure upside, creation of demand. and then we would look to then take that trade, right? We need that full confirmation of the order flow switching from then that weak area right here to then the strong area right here, right? Weak hands are coming down right here. We have that liquidity that is being built the entire time, and then structure breaks, demand is created, and then we get that strong move, impulsive move from that. So instead of, right, setting limits on every single one of these zones as it comes down into this area, because knowing that price is bearish as we're starting to come down, right? Even if price comes and taps into this zone, what's to say this is going to happen, right? We still need that confirmation coming down into this zone. So price could easily come down into this zone, even break straight through it, or create a lower high and continue from that. So understanding that, right, I'm also understanding this move to the downside as we're coming down. I understand that we got a lot of volume on these breaks of structures to then the downside, right? Look, we get a break of structure right here on the daily. Price comes back up to fill institutional candles and mitigate areas of supply. Right, a daily institutional candle, area of a drop-based drop consolidation candle, right? Your doji candle. So on the 4 hour, this is going to look like a redistribution, right? We took highs, again broke structure to the downside. So I see more supply being created, right, on these moves to the downside as price is coming down, right? And then we get a large impulsive move to the downside, starting to break structure. So I still need a 4 hour confirmation, right, to even put in a daily lower high, because now my daily is bearish. So go into the 4 hour, right, waiting for price to react to then our institutional candle, our zone of demand, break structure upside, and then look for a possible trade out the range. Now that price has come and mitigated our zone of demand, I'm looking at this most recent range. So we had a break of structure downside right here. Price came back, mitigated that institutional candle, right? That last buy before sell candle, area of supply on lower time frames within here, and then price moved down within that. Left areas unmitigated here, supply zone right here. We have an unmitigated institutional candle here. And now we have our range. This is going to be the first range that I'm looking for. So I'm drawing it out like this, looking for premium and discount. If I get a break of structure upside or something that shows me what I want to see, then I can look to take a trade. Price comes into our institutional candle and then breaks structure upside. Now if we're looking for the candle before the candle that broke structure as our demand zone, or the institutional candle within that zone, here's your candle before candle that broke structure. So you could mark this as a demand zone. Or you can look for the entire consolidation, understand areas of institutional candles right here. Right, and look to possibly make a trade that way. So now at this point in time that I've received a 4 hour break of structure upside, I'm looking for a daily lower high, as well as looking for areas of unmitigated supply and demand and liquidity within this certain range. So I'm not just automatically looking to take a long position. Yes, it has shown me what I want to see, right? But at this point in time, I'm looking for take profits as well. Because again, your entry or your exit, right, is most or just as important as your entry. So we have liquidity within the range, right? Early shorts that started to short this as price was coming down here. They thought price was going to continue to the downside, whatever it was. Here's your liquidity, right? We have a displacement right here, area of supply within here. So let's go ahead and get rid of this now that this has been mitigated. Right, we have areas of supply here, but I'm looking for areas of supply higher within the range. Why? Because looking at our premium and discount, right, this would still technically be in discount within this range. I've already received a 4 hour break of structure upside, so I'm looking for a daily lower high to be put in place at this point in time, right? But I need price to then come up, fill unmitigated orders of institutional candles as well as imbalances. I have a supply zone here, right? If we're marking out the entire consolidation or the institutional candle, You can just mark this out as supply to make it simpler, as well as a displacement right here, right? And then that institutional candle that was not filled up here as well. So we can mark this entire zone as a possible zone of consolidation, right? But to be safe and to be conservative, I'm going to be looking to take profits within this certain area. Right, this would be a lot of risk. This is just a 4-hour chart to show you the behavior of the range. Right, but it would end up looking like something like this. Or you can have your stops above the demand zone, or sorry, on top of the demand zone, right, with stops below the demand zone, or bring it all the way up to here. Now this is the 4-hour chart. We would need to bring it back all the way to then the 1 hour, the 15, if we wanted to get that full move to the upside, right? Full confirmation of a reversal. But at this point in time, if I receive a 4-hour break of structure upside, I'm looking for a daily lower high. We see price come into that zone, right? Fill that institutional candle, tap into that demand that we talked about. And then we see that move from that. We're looking for areas. Oh, you're all right. We're looking for areas higher within the range. Price then moves up. We see that reaction off that supply, right, that we were talking about. That first supply, price moves down, reaccumulates, and then takes out all of those shorts. So everyone who was shorting within discount, right, was just taken out. We're now in premium of the range. We just took liquidity as well. Right, so then we start to create our internal range. As far as gold goes, we start to see moves from that, right? Price ends up tapping into our zone of supply, and then from that, we get the final move to the downside. Now, this is just looking at it from a counter trend long perspective, right? Noticing that we're in discount, noticing that we got a break of structure upside after mitigating a higher time frame institutional candle, right? Targeting our area of supply that we were talking about. Price came back into that supply, took out all the previous highs, and then from that, we had that move. So if I remove this, right, and we understand our range that we're in, now that we had that 4-hour break of structure to the upside, right, as well as this impulsive move to the upside, and this impulsive move to the upside right here, I'm looking for that supply to be then mitigated, right? So then we can now take this trade to the downside. Why? Because we are looking for a daily lower high. So let's bring this back a little bit. But we understood that we were in a long trade down here, right? Price moved away from that up into our area of supply. I'm looking for the daily to now show me that same exact thing. So if I want to draw out my range here, right, from this impulsive move to the upside, is as soon as this liquidity was taken, I'm now focusing the range to this move. And this is where I'm paying attention to it. And this is where Wyckoff can get confusing because we can start to see what we think to be distribution or something similar, right, in an area of discount that ends up distributing to then reaccumulating, and then we get taken out of our trades, right? Areas like this where price distributes to the downside, and we're like, oh, we're taking this to the downside. Everything is there, right, as far as structure goes. But remember, we need structure, liquidity, order blocks, institutional candles, everything to come into place for us to be able to take that trade. Now, within this range, right, we're starting to get into premium of this range. We're in premium of this range now as well from this impulsive move that caused a break of structure to the downside. So this is where I want to pay attention to it. If I want to take a trade to the downside, the main things I'm going to be looking for within this scenario, within this range, is going to be the creation of long liquidity. So I want to see early longs getting in trades, thinking that this is a breakout, right? Thinking that price broke to the upside right here, right? Trend line, whatever it was, from this large impulsive move to the downside, and they want to see a continuation to the upside into areas of unmitigated supply up here, right? Or areas higher within the range. Now, we know what we want to look for, so if I'm given what it's looking for, right, then I can look to possibly take a trade to the downside on a market break of structure. As well as I want to see, as price is creating that long liquidity, I want to see us maintaining our premium status, right? Maintaining expensive, basically staying expensive and getting people in longs. So late longs will be getting in trades, creating the liquidity needed. So once we get a break of structure downside, right, then we can look to then take that trade to the downside. So at this point in time, if we're looking at the daily and looking at highs that cause new lows, this high was then broke structure right here, right? So this area is an area of demand. But we know that this impulsive move to the downside broke structure. So overall, I'm looking bearish, right? I still need a 4-hour break of structure to the upside after coming down to these zones of demand, mitigating those zones of demand, breaking structure, showing me more demand, mitigating those, right? And then continuing from that. I would need to see that healthy price action. But if price maintains premium and creates long liquidity, instead of creating short liquidity and mitigating demand down here, then I will be more short buys. Now this is our daily range, right? We started to play this out. We start to see one move to the downside right here. But looking at this, right, none of this low was the most previous low that caused this new high right here. So I need a low that caused a new high to be taken out for a break of structure. I see a low created right here. It causes a new high right here, closed over these candles. So I'm considering this a new high. If this low is broken, if I get a break of structure to the downside right here, then I can look to then possibly take a trade. We then see that break of structure to the downside, right? And here's my volume as well. If I'm looking on a daily chart, right? We saw that supply mitigation as well as that move to the downside. Right, so looking at our range again, understanding what's happening within price action right now within our range. We see long liquidity that is created right here within our range. We understand structure is bullish, so at this point in time, I'm still looking for higher prices, even though, right, overall, we still have that bearish flow, that bearish momentum. So we see that long liquidity created, right? Price takes out those previous longs. Here and here opens up liquidity within the market. This move is still an impulsive move that broke structure to the upside. So if we can create some type of demand, then I'm still looking for higher prices. Right? We create demand, price comes back up. So you can see after liquidity rate and the demand mitigation, right? Then we see our move. Price comes up. I don't think it mitigates supply on this one. No, it does not. Comes very close, starts to move off from that. So now more shorts are getting in trades, right here, thinking that they missed the trade. We can start to see that liquidity that is being built up, right? All of these clean, relatively equal highs that are being created. Price then blasts through those, right? Raids liquidity to the downside and blasts all of this liquidity, mitigates supply finally. And then from that, we see the move. So understanding, right, that the market has objectives and knowing that I can hold my take profit until this supply zone, because this is the supply zone, right, that I have marked, that is unmitigated. It is in premium of the range. It's not too extreme, right? I'm not being too greedy as far as this goes, holding for something up here, hoping for a price to come up into these areas. Or anything similar, right? I found the cleanest, most available supply zone as well as institutional candle that has been unmitigated, that caused this impulsive move to the downside, that is in premium within my range. Everything is coming together, right? Knowing that this objective is here, we can successfully hold these longs, right, that we were in over here. We can successfully hold those to that objective and not get that FOMO, right, to enter a short position right here or to take profits right here, right? Because within the situation, I still do this, right? I get in situations to where I'll take profits a little early because I see price start to create supply, break structure to the downside, whatever it is. But there will be situations, or every situation, the market will reach its objective, right? We end up seeing the market reach its objective, and everyone who is trying to get in right here because they thought they were going to catch the move to the downside, right, is taken out in 1 4-hour candle, and then the move proceeds, right? Now all of this price action from a month, 2 months, right, has been taken out in a day, day and a half, just because of our liquidity objectives, right? Took out our liquidity, mitigated our unmitigated supply, and then from that, right, we got the actual move to the downside. That showed us that impulse. We got the volume that we needed, right? And now we can look to take this trade to the downside. So one daily institutional candle, right? Now that we've gotten that daily closure to the downside, I can expect price to then continue to the downside from here on, right? And we'll see our final move, taking out lows as well as these lows right here, right? Lows that could not cause a new high. Considering these as a weak low, we understand liquidity is here as well, right? We can see all these lows that were being built. So at this point in time, the more longs that are getting in trades, right, are generating more liquidity as price is moving down. And then there you go, right? We get that final continuation, price respects that, and then we get to move to the downside from that. So understanding that we have objectives within the market, or the market maker, composite operator, right, has objectives, we cannot catch that FOMO, right, that FUD, and know that, yes, price should proceed to tap to this area. If it creates new supply or demand and then continues whatever it is, right, I will be taken out of my bias. But we can start to look for clean areas, right, and start to practice these, back tests these, forward tests these, put it in every single chart that we can. Just start to throw out your positions, right? Whether it's a short position, long position, post it, right? Post some charts, ask questions. It's a process, right? A very, very practicable process, right? Where we're just going to be basically going in there, right? Getting the repetition, getting your hands on, and understanding the muscle memory. So now I'm only looking at this entire move as entry here, exit here. That's all I'm worried about, right? I'm worried about my objectives. I'm not worried about what happens within here, right? Because based off of my analysis, based off of everything I had did, right, with my plan, price should hit my areas, right? Price should mitigate those areas. And we see that happen, right? We see the breaks of structures, confirmations, price moves up, mitigates the area, and then puts in that final lower high, and then we get that continuation. Our next stream, we're going to go over our higher time frame, so our daily to then lower time frame entries within this gold trade, how we're able to get a 50 to 1 R&R on this move to the downside right here. We actually ended up catching it all the way over here, so super confirmed, right, on the actual move to the downside. We will go over that on our next stream, but I wanted to utilize these last 15 minutes or so for Bitcoin and ETH. Go take a look at what they're doing. And if anyone has some questions, feel free to ask them now. Let's get rid of these, and then let's go look at Bitcoin.
Oh, mommy, my meatballs.
Love you, Flo.
I love you too, man. Here we go. Let's get rid of all this. Okay. So ever since we started streams, we have been long biased. We have been long biased. Even though we have looked at it as short, right? I have been long biased overall. Why? Because I told to myself, look, one, we understand balance needs to be within the market, right? So price cannot continue to the downside if, one, it doesn't raid liquidity and then create new supply, or two, mitigate old areas of supply as well as imbalances, right, from our previous break of structure to the downside to even move to the downside, right? So I know that a lower high must be formed, and we're using our structure, right, to then confirm that with that. So we have our higher time frame narrative. Now we're understanding price action within that. We've drawn out this range a couple times, but we'll go ahead and do it again right here. Highest high that caused a lowest low before the consolidation, so that's where liquidity entered the market. Right, our range is being built. So why are we looking for higher prices overall in Bitcoin? Again, right, we have our demand zone, our most recent supply, supply, so accumulation to then distribution, creation of supply. Our most recent zone of redistribution that caused a new low was then violated, right? We saw a break of structure to the upside. So again, talking about what we were talking about gold, right? That consolidation before that impulsive move to the upside. Yes, we have one. Do we have an imbalance? Yes, we do. This imbalance that was created right here. Let's just draw out this entire zone. Right, do I have an institutional candle within this zone? Last buy before sell candle that has been or last sell before buy candle that has been unmitigated? Yes, I do. Right, so using this same logic and understanding what price action is doing, we see price come up into this range, break structure to the upside, right? And then we start to see longs being created. So all of these equal longs that are being formed. This is liquidity as well as demand. So whenever I see liquidity start to be formed before demand, this gives me more confluence as far as longs go, because price rates that liquidity, already opens up more liquidity, and then mitigates demand. So now people are out of trades while price is mitigating previous orders that institutions have filled, right? So price break structure to the upside, starts to create that long liquidity, right? We see then that demand mitigation, but this is important right here. As price is coming down, this is exactly what we want to see. Supply is being taken care of, right, on this entire move. We see all of these relatively equal highs, right, as well as equal highs above the whole range. So I sit there and I say, okay, where is that supply that's unmitigated, right? That possible unmitigated institutional candle. Well, I see this is the last up move, right? We get a liquidity rate to the upside here from these equal highs, and then we get that break of structure to the downside. So I could see price possibly coming up into these areas of supply, right? This distribution that had played out and caused a new low. Come up into these areas, mitigate these areas. This is why I was saying 22.7, right? This area of distribution that caused this new low right here. Come up into this supply zone, right? Raid liquidity, take out all of the shorts, mitigate our supply zone, and then come back down for now new demand. So looking at our range, right? We understand this area is an area of supply. Right, we see our shorts that were just taken out, and then on this move right here, I'm looking at all this liquidity right here. So I have areas of unmitigated demand that lie within here, 19.7, right, as well as this reaccumulation here. If price can come back down into these areas, either raid liquidity here, right, respect demand, and then we can look to then possibly take a reaccumulation buy, right, from this move to the upside. We're looking for some side of distribution to then accumulation for the creation of demand for the continuation. After mitigating these areas or filling these unfilled areas of imbalances down here, or price could come down, take out all of this liquidity down here, and still respect this demand down here. As long as we respect this new low, as long as we respect this low that caused this new high, then I'm looking for higher prices overall. So we look at the liquidity, right? Everything that is unmitigated within, and then we'll look to see what happens from that. So now we'll go to ETH, see how she's looking, right? Probably very, very similar, but the same exact scenario. Again, that demand areas of unmitigated orders, they are filled. Price break structure to the upside, right? Creates demand, and then we see that final move to the upside at the same time within this whole range. We are starting to be in premium now, right? Starting to come for these higher time frame buy side liquidity. So if we see that move out of that range, that final break of structure, and then price either comes back down to fill unmitigated orders here, right? If I'm looking on the daily, I think we just put in a pretty good candle. Yeah, this institutional candle I'm looking at right here. Currently for possible buys, if price can come break structure and then come back down into this area, then I'll be looking for 4 hour to then fall in place from the 1 hour all the way to then the 1 minute. But as far as it goes, right, it's that same exact thing. We're understanding the liquidity, where it's at within our move, areas of unmitigated demand or supply within our move as well. And then from that, we can understand premium and discount, and then look to take our trade based off of structure as well as order blocks. But that is pretty much what I had for you guys today. If there are any questions that you guys wanted to ask, go ahead and ask them now. This is recorded, and this will be thrown up on the YouTube once it is done here, done rendering. But overall, for ETH and Bitcoin, I am looking for higher prices right up to the lower high. This previous range that caused a new low right here. I also understand this area to hold a lot of short liquidity, So I could see price coming even higher, right, to these 27 areas that the start of this move, right? Because if we're looking at now this entire range, from the extreme high to the extreme low, this would still technically be in discount. So my areas of unmitigated supply, no, definitely discount. But my areas of unmitigated supply and imbalances, right, that were left within this range are going to be in premium. So I'm looking for areas higher within the range, right, versus areas lower within the range. Now, if I was intraday scalping, right, whatever it was, I need to take profits within these areas, right, to protect myself, conserve my trade, and then from that look to move. But I could really see price, right, if we break structure to the upside. The weekly is starting to look really good as well. Yeah, we're putting in a bullish engulfing on the weekly. We'll see how this closes. But, right, if we can continue to just create that demand, raid liquidity and create demand to the upside, and continue to create higher lows and higher highs, then I could definitely see price coming up to these 27 areas versus the 17 area. I feel like this could be a Fugazi zone, right, for all of these shorts. Price comes back up here, right? We see something like this where it raids liquidity, and then it starts to come down.
Zone.
Everyone gets in shorts, right? They're thinking that it's going to create that lower high, and then price comes back down to these zones, mitigates demand, breaks structure to the upside, right? Mitigates that demand, and then we see that final continuation, and the lower high isn't put into this area. Now I could still see a lower high put in, right, from this entire move overall. But if we continue to break structure to the upside, right, show that demand that I was talking about, those higher lows that are formed, then I will look for that weekly high. Because like I was saying right before, we can't go up unless we can go down, and we can't go down unless we can go up, right? It's all about that balance. But yeah, if you guys have any questions or anything like that, go ahead and feel free to ask them now. I'll give you guys about 2 minutes or so to do so, and then I'll go ahead and wrap it up. Any suggestions or anything like that you guys would like for future streams, those are always welcome as well. You can ask in the DMs or just at me in chat, anything similar. If you guys wanted any charts or anything like that as well, I will be looking for those. Now that we are starting to receive, I will say, higher time frame breaks of structures on ETH and Bitcoin. Crypto market, right, looking good. I'm going to start to be looking at some alts, some higher time frame alt trades. Looking to see if we can catch some nice moves here. So again, I appreciate everyone coming out on a Thursday night, right? It's late, right? We're all out here, we're working, right? I appreciate it. If any, like I said, if there's any questions, feel free to ask. All of you guys have a great night, and I look forward to seeing you guys on Tuesday.
Thank you for the class.
Yes, sir.
Have a good night, Flo. Much love always.
You too, brother. You too. Ooh, Didix, coming right at the end. Let's take a look at Didix real quick. I have not looked at Didix in, oh my.
Oh, it's bad. Oh, wait, never mind. DYDX? Oh, wait, never mind. I'm thinking of DYX.
Oh, you were talking about, yeah.
Oh, wait, I'm thinking of the Dixie.
Dixie,
Oh, I'm
yeah.
retarded. Dixie
I think Oscar was telling me about this coin. I liked, because I had this marked out. I liked this area, this demand zone, this 1.586 area. If we can come back down into this area that caused this daily break of structure,
It
This
looks like
imbalances.
STB.
Yeah, or we create the higher lows and continue from that. But this is this demand zone that I'm looking for, this 1.586 zone. I'm looking for us to respect that zone, come up into this area, create a lower high, right? The profitability opportunity is going to be insane with some of these zones. Yeah, 100% move just to the next lower high. So definitely like this chart. I definitely do. And there's going to be a lot of alt charts that
I'm
are
gonna
looking
load up
like
the
this.
crypto port with that one.
I'm saying, man, get your Bybit going.
No, I won't lie. That does look like a really nice Akeem schematic.
Yeah, there's a lot. A lot of these altcoins are gonna be looking like this. I'm doing
That stop hunt is clean.
oh yeah, right underneath. Overall, I
Yeah, right
mean,
underneath the selling climax. That
you're
you can
looking
draw out
at
the top. Nah, the daily. Like zoomed in on the daily. Literally off the low to the high, your selling climax and your automatic rally. On yeah, right there.
yeah,
Selling climax, automatic rally. You can mark that out as your range.
yeah, that's clean.
But you'll see you fucking stop hunted the selling climax perfectly. Yeah, that shit's gonna
This
moon.
range right here, yeah, I got you. Yeah, no, I really like this chart. There's a lot of altcoins that are gonna be looking like this. Yeah, definitely right. Broke structure to the downside right here. Here's your supply that was created.
If that's a
Continuation.
daily, if you zoom in more, I think right there after your STB, that's your LPS right there, your reaccum. So that would be your LPS for the no, all the way to the right there. That would be your LPS. So I think you're
LPS
actually
here.
about to break. Yeah, I think you're about to break out of the schematic pretty soon.
Yeah, that's what I was looking for as well. If we break out up here, and then
Because
I'll
you
look
got
for
your
demand
STB
here.
and then yeah, right there you have your reaccum.
Yeah, it's
Then
either
that
I catch
reaccum right there
this.
forms your LPS.
Yeah, it's either we catch this move, or then you wait for that whole break of
No, that would
structure.
actually be the perfect entry because if you draw your trend line, that would be the BULPS. You have your jump across creek right now. Now you're gonna get your backup or your backup at the end of the creek.
Oh, you're talking here.
Nah, from the top, the automatic rally. That's where you draw your creek from.
Oh yeah. Oh, the little range.
No, like just a trend line.
Oh, I don't even be doing all that if I'm gonna be honest. I just look at the behavior is all. But yeah, I see exactly what you're saying.
Yeah, you can see exactly where you broke your trend line.
Yeah.
That's your formed creek, so that's your buildup of sell side liquidity, basically.
Buy side on this way down. You
Or
mean?
yeah, buy side, sorry.
Gotcha.
Yeah,
Yeah.
your
No,
buildup
I was
of
just
buy side.
confused as
Just your trend line liquidity, creek,
yeah,
all the same shit.
yeah. This move on the down move right here.
So
It's a
you
bunch of
could come
shorts.
up, take out the top of the range, put in an SOS, and then fall back for your BULPS.
Yeah,
So you
it's
could
either we
start
get
to
this
form a
one.
distribution schematic here
I hope we do.
on the lower
That's what
time
I would
frames.
want because we're looking like we're manipulating highs. Volume's high, right?
And those are clean equal highs being made right now too.
Super clean, super clean. So I could definitely see price distributing here, coming down into these areas, filling these orders, and then going from there. This is the perfect entry in my opinion. But if we get that break out of the range, then we'll look for demand following another higher low.
Yeah.
Yeah, I like this chart, man. I'm gonna go ahead and do a bunch of charting on all these altcoins now that I'm finally got to move right on Bitcoin and ETH, something that we wanted to see.
Una?
Hey yo, Luna Classic now, or is it just yeah? It's Luna Classic. Hold on, let me get that line back. Yeah, you got your Luna Classic. But yeah,
That's clean. You got fat volume on that breakout too.
yeah, it looks really good, dude. I really like Didix. I like this area a lot. 1.586.
I love Didix right now.
I'm gonna go ahead and actually set some alerts for this, and we'll see how this goes. I can
Get
set
Playboy
something
to load up
lessons
the
too.
spot port.
Nah, for real, needs to. We gotta get this man in here. But yeah, man. Thanks again, all. I'm gonna go ahead and end it now. But thanks for popping out. Any questions or anything like that, feel free to ask. But thank you, and you guys have a great night.